This is my 5 top stock picks for the week of March 16th, 2015. I'm a little late today. I usually try to bang them out on Friday evening, but this one's coming out on Saturday morning. Well, as you can see, I've been listening to Beethoven, and something you probably don't know is that most people who put music on YouTube are doing it to make ad revenue, and you'll see all these little yellow portions down here that show you where the ads take place. This video is amazing because it's 6 hours long, but there's no ads at all. So I think this guy was just trying to do a nice thing for people. If you like the B-Dog, check it out. Anyway, let's get to the point. Let's go ahead and go over to Yahoo, Finance at Yahoo. Click on the interactive charts, and you can see the charts. We're going to want to switch this to a candlestick mode, and we're going to want to look at least 1 month out, so we're seeing daily candlesticks. All right, we're going to start with stock pick number 1, which is S. Everybody know what S is? Probably not, because S kind of sucks. But it's just one letter, right? So it means it's a big company. It's Sprint. Sprint sucks, but the stock is looking good. First of all, you got to know something about the book-to-bill ratio, which is a ratio that determines, it actually predicts the future of tech stocks. And when that ratio is above 1, tech stocks are looking good. Now, 20 years back, that ratio is like 0.5. Today, the ratio is about 2.0. So any tech stock you'd invest in is probably going to go up just based on that. Sprint is a tech stock. They obviously are a tech stock. They're in the cell phone company. Now, why am I going to mention Sprint? You know, I'm a technical trader. I like to look at the candlesticks. Well, check this out. It's on the way up, right? Well, first of all, check this out. This 2 candlestick pattern is called a bullish engulfing. It's when the green candlestick eats the previous red candlestick. That is indicative of a coming bullish trend. Now, if you look out far enough, you'll see there's a gap right here, and it hasn't filled yet. Now, technically, all gaps will fill within a year or so, even if they are these huge volume gaps. This one we call a breakaway gap. The trend was downward, but we're going up, and we've almost filled that. So we can look for a price point of about $6. Don't know when it'll come, but it should come. So that is an easy $1 investment on a $5 stock. What's 1 divided by 5? I haven't been in math class for a long time. That's 20% right there. I am so stupid. That's a 20% gain. So stick with it. Sprint. Cheap, easy, 20%. Stock number 1. All right, stock number 2 is actually an ETF. What's an ETF? It's a way to trade on something that doesn't exist as a company. So the ETF we're looking at today is MSCI Japan. What you're basically trading is the Japanese stock index. Now, you probably all know that I'm a Japanese fanboy. I live here. I was actually in the sushi shop a couple of days ago when I saw the news that the stock market hit all-time highs. And that's what we're seeing right here. Now, this ETF is a little weird because if you look back, if you look anywhere, but if you look at even 1 month, you see it's really gappy. There's gaps all over the place. And gap is my forte. So what we're seeing here is it looks like a breakaway gap because this volume is higher than the volumes in the past couple weeks or so, and we're out of our trading region. In the past month, the trading region never got this high, and now we're getting that high. We've got 1 candlestick, 2 candlesticks, both bullish, increasing. If you want to invest in Japan, try an ETF. You don't have to try this one. This is the one I picked out because it's cheap and it's actually going up. It looks pretty good. I would say if you are interested in investing in Japan at all, this is the stock to go with. All right, check this out. I'm looking at the wrong thing here. Obviously, a lot of Japanese music. Okay. All right, FXCM. I completely forget what this is. Is that an M? I hope it's an M. FXCM. All right. Penny stock. Already up 20%. Is it too late to get in? No. Why not? Well, I was going to show you that later. Okay, here's what we got. High volume, a gap. You see that? disconnect between this candlestick and this candlestick, a gap above the trading region that's very indicative of a breakaway gap. This is a gap that's probably going to continue upward, so we should get in on this early. In addition, we've got a huge gap right here that hasn't filled. And as I said last time, statistically, within like a year, this gap should fill. This is a very good buy and hold penny stock. If this gap fills, where's this gap? It's about 13. We're at 3, okay? Let's do that math again. We're going to make 10 bucks on a $3 investment. So you're making 300% of what you get when you get in. It might take a while, but it looks like it's starting to close right now. If you look at that 3 months out, it's been stable up until now. Now we're heading back up. I can't promise anything, but for penny stocks, a lot of the times there's a pump and dump kind of pattern. So you'll see it peak and then drop off. Recently in my penny stock newsletter, what do we trade? ASTC, I think. Today we were closing ASTC because we were seeing the pump and dump patterns. There we go, right there. Pump and starting to dump. So we're getting out as soon as possible. We actually bought in way back. I'm pretty good at picking out penny stock winners. We bought way back in January, actually. Yeah, right here. We bought in this candlestick. We saw that gap. It wasn't really a gap, but technically, it has all the fundamentals of a gap. So we bought in here, and we're getting out tomorrow because they're starting to dump. Anyway, don't worry about that. Let's see here. GDXJ. JDXJ. This is another ETF. Right now, buying gold is not a good idea because the economy is good. Gold increases when investors' sentiment toward the market and toward the financial industry falls. So if people have a good outlook on the U.S. economy, you don't want to get in on gold. In fact, you probably want to short gold if you can. But gold miners ETFs are different because they tend to invest in companies that actually go and find gold. You're not investing in gold directly. Now, I always wish to show you 1 month out first, but it doesn't matter because the gap's right here. So we got a gap right here. We've got a bullish Harami. This is a Harami candlestick pattern that tends to move upward. This gap will close at about what? Let's see here. This gap should close about 25. Let's say we're at 23. So that's a $2 gain on a $23 investment. That's a quick 8%, 9% gain right there. Because this gap's probably going to fill. The majority of down gaps fill within 11 days. So we've got about 4 more days statistically on average for this to fill. Get in if you can on Monday. Get that quick 8%, get out, and then invest it in the next stock, which I'm going to show you right here. JCP. You know what that is? It's JCPenney. You guys like buying clothes at JCPenney? No, me either. JCPenney was built for the middle class, but guess what? Middle class isn't doing so well these days. Everybody wants to buy clothes from either cheap places like, what's it called? Walmart, or they want to get like tailor-made clothing, Gucci, brand name stuff. So JCPenney's not doing so well, but guess what? We don't make our predictions based on the company's fundamentals unless we're doing long-term buy and hold. We predict based on the candlestick patterns. Now what we got here is a 2 white soldier pattern that was preceded by a bullish Harami pattern. If you look out a few months ago, we had a breakaway gap. We're going up. That gap should fill. It looks like it was about to fill at one time. But actually, here's one interesting pattern that a lot of people don't know about. If you've got a stock that's kind of at a yearly low, it's near to a yearly low, but it's also at a 5-year low, statistically the stock will reverse and begin to go upward. Just statistically. Unless JCPenney is really dying, and I don't think so. It's been a long time. It's a very old company. It's almost got up to $100 in the past. But anyway, statistically, a company at its 5-year low and 1-year low, I'm not sure if you'd consider this a 1-year low, but statistically it should go up. I was thinking, just based on the recent candlesticks and the fact that these what do you call them? They're not really necessity stocks. All right, you got two kinds of forget it. Okay, Alright, whatever. If you got extra money, put it in this. It's cheap. It looks like it's going up. That's all I gotta say. It's got a down gap, a little scary. If you want to scratch this from the record, I'm sad to end on the worst stock of these five stock picks. So let's just scratch it from the record. If you got extra money, pump it into that. But yeah, I just looked at it. It's not that great. These are the four you want to be investing in. Please subscribe. If you subscribe, you will get the weekly stock picks every week as soon as I post them on YouTube. So please do subscribe. Thank you.